Hi traders and welcome to Technical Analysis Market Watch on Friday the 19th of May. So we've finally seen some good action in some of the indices and the currency pairs, and look, we've seen some very key levels be taken out in the last trading period. So we'll jump straight into the charts and see if we can identify any trades for today or early into next week. All right, we'll start out here with the Aussie USD, and we can see that we've got a pretty reasonable move off those moving averages that we were talking about. Look, last week we were sitting around this level here on the Friday. As you can see, the moving averages held up again. The 20 and the 50 running sideways really made it hard for this particular currency pair to go up. So we had it was a pretty good feeling that it was probably going to go down from there. Obviously, with all the role reversal resistance there, you can see when you got overhead resistance like these periods here, like right through, this is a daily chart. So you're talking about a week and a half of action, and all of this action right through there. This is a very, very strong level for it to break, and it's held up again with the bolstering of the moving averages there. Now, look, we obviously had unemployment numbers that didn't really favor the market movement going up. That did affect the Aussie a little bit, but in reality, they were all there anyway. The resistance was there anyway. So look, in a perfect world, it's going to probably continue on down to the bottom of the market, but realistically, we're floating inside a channel, a very strong channel at that, have been for quite some time. You can see we've got three very significant touches just recently. Then we've got all this action here, and obviously two very important touches on the bottom. So if you're going to play the Aussie game, I think you need to be staying inside these channels. Look for the smaller time frame changes of trend, of course. That's really going to give you your guide for the smaller movements. If we see any action around the bottoms here, around that sort of 65-80 level or a little bit higher, and it looks like it's going to reverse again, the moving averages are the obvious target, and then onto the 67. But realistically, you'd be staying inside this zone until we either get a daily break below 65.80 or a daily break above 67.80. So it's a reasonable room for movement. You've got 200 points of movement there, really. So you should be able to find some scalping opportunities in between there, but just understand the bounds. With those two big red lines are very, very important for the Aussie at the moment. Until they're broken, I would confine any trading opportunities, both long and short, inside those zones. All right, we'll move over to the US dollar CAD. And look, it's been an interesting one it's been all over the place, really. It's been up, down, and all around. You can see it did come down and test the 200 moving average and this support zone basically on Tuesday at the start of the week. Look, it's one of those ones where it's a little bit difficult to trade at the moment. I'm finding it awkward to find a position that I'd be really comfortable with. You can see that the wicks are very, very long. Like all of the daily ranges are quite big. So look, if you're looking at the smaller time frames and trying to scalp very small amounts, you're probably going to be okay. But really the boundaries for it are a little bit too far away to actually have significant take profit and stop loss zones. So for me, it's probably just a bit of a watch and see until it actually breaks out of this zone. It even needs to break below 134, or it needs to break and close above the 135.50 area. If it does that, that's a different story. Then we're looking at a move up, potentially higher, up to the 136 or even the 136.30 here, which were the previous highs. But it's got a bit of work to do before it does that. It's got to break through the 20 moving average and the 50, and of course that reversal zone there at around that 135. So yeah, interesting for the CAD, but a little bit difficult to trade. On the downside, though, if it does reverse from down here and gets below the 20 and the 50 moving average again and starts to track down on a smaller time frame, like say a 1 hour, then you can start to target the initial move down to about that 134.20. That would be where I'd be looking at taking profits in the scalping situation. But if we do get a close below this level here and we're starting to track lower, the obvious target is going to be the 133, but I wouldn't be doing that unless we had a daily close below this level, because I would think that this level is probably going to hold up. It has several times, so be very conscious of this level here if you are scalping short. Over to the US dollar yen now. And look, this has been the breakout trade, really. Like I said, we know we had support here. We bounced off it. We had really, really good levels to bounce off. And it's continued on with the job. Friday's candle was the one we were waiting for. We knew we were at support here last week, but this one, the breakout candle that closed above this resistance zone is what we wanted. Once it did that, you were in. Hopefully you were paying attention and you did get this trade, because on Monday that provided an amazing opportunity straight up to the 138. I wouldn't be still in it now. Like it's one of those ones where the 138's got resistance at it. It may well continue on, but look, the initial impulse move is the one you wanted, and that was several hundred pips. So if you did get in on this candle here, which is absolutely the entry candle, and that set up the week, this is where you would want to be taking profit. But again, if you're still in it and you want to take some off or break even, I mean, that's all, of course, they're all legitimate strategies as well. They're not going to, you're not going to go too broke doing that. But in my mind now, it is at resistance, and what I would need it to do is come back to around that 138 and find support here, and then a rounding bottom on a smaller time frame, and then I would be looking for potential moves up longer than that. But until it does that, yeah, I think I'm just quite happy with the move that it did up through there. But yeah, really good trading, and hopefully you guys caught that. It's very, very strong at the moment. If it closes a daily below the 138 again and it starts to roll over on a 4 hour, I'd consider maybe shorting it back down a little bit, but I wouldn't be too excited. I'd only be going probably to the 136 or to 80 area at until it actually proved itself to be really weak. And I wouldn't be looking at anything under a 4 hour for that, by the way. I wouldn't be taking a 15-minute change of trend or anything silly like that, because this momentum is too strong. You got to really adjust the time frames to how strong that momentum is, and this is obviously very, very strong. So it would take a reasonable time frame reversal for me to be interested in the short on that one. All right, onto the dollar index now, and yeah, this has done what we were hoping it would do and broke through the zones. This is, again, Friday's candle. You can see once it did that, the opportunities were really good for the move up. Of course, the euro was the one we're really considering trading here. But yeah, this was giving us all the signs that we needed that the strength has returned to the dollar index. And off we go. So big move up. Obviously, we had a really good move. Whether it's done or not is I guess open to interpretation. We've got very strong resistance here at 103.40, but it's not very far away, right? It's only 20 points away. But the euro is the one we really want to trade, and as you can see, it's done all the things we needed it to do. The weakness in the end did prove too much for it. The resistance was too strong. And it's come down in a very orderly fashion. I think that's really important when we're trading, that we're seeing the market behave itself in a way that you can actually trade it really easily. And this is certainly what it's done for us. Lower high, lower low sequences all the way. In fact, my 2 Tuesday market watch trades have both been on the euro because they were just the easiest setups to take, and they were really setting up perfectly. So you can see that the 50 moving average was the pullback zone there to around that 109 level. Once it hit that zone and broke through here, it was a pretty easy trade all the way down to 108. 108 was my initial target, and I'm pretty happy there, really. It could potentially go lower. The dollar index has got a little bit more in it, but it is approaching resistance. So it might find a little bit of support around here and retrace, but I'd only be looking for a retrace back up to probably the 108, maybe 108.50 at an absolute stretch. Because realistically, the zone that we could be targeting here is the 107. But for me, the 2 trades of the week are already done, and you could have taken profit easily. But if you are still in, break even at the very least, maybe take a partial profit, and look for a move down to the 107. But I could see that we could probably reverse just a little bit here, maybe pull back up to that sort of 108 area. It's not a big pullback. It's only, you're talking about 40 points, but still it's a pullback that's significant enough to reverse from there and continue the trend down. That's all it did here, and it was enough to give it the next push down. So yeah, really good trading on the euro, and hopefully you're able to catch that. Not interested in the long in any way, shape or form until there's a 4 hour change of trend at a significant zone. And if it doesn't do that, not even looking at scalping long, because the momentum on the way down is extraordinarily strong. And finally, we'll look at the S&P. Look, it hit the target that we were looking for as well, the 4180. It went a bit higher, as they often do, but we know there's very strong resistance here. It's up to it now to prove itself as to whether the all the selling is done for May, and is it going to continue on. Look, tonight's trading will be a significant indication of that. If we're trading above the 4200 level at Monday's open, then we would be looking at that and saying, okay, that maybe the strength is going to continue. But for me, I would wait for it to prove itself. I'd want to see a bit of a reversal around the 4180 level, which I know is very strong. It's a roll reversal zone. If it comes back and tests that zone and then round bottoms off, lightning bolt on a smaller time frame, then I'm going to be quite comfortable looking at a move up higher, maybe up to the 4380. But until then, though, I think we need to just let the price action play out, and we'll see where it leads us on Monday. So if we're trading underneath the 4200, we'll look at potential shorts back down to that 4180 and 4150. But if it does continue on and starts to really show strength up there, we'll reassess and look for that 4380 as the next real target. So hope everyone's had a great week's trading. I think we've seen some really good moves this week. Hopefully you're able to take advantage of them. Our setups that we were talking about last week have actually played out and hit the resistance and support zones that we were talking about. Hopefully you're able to catch some of those. Have a great weekend. I look forward to seeing you all next week.